Hello there everybody, very good morning to you all and welcome back to howtotrade.com and welcome back to another live stream here in our trading room and of course across our social media channels as well. Hope everyone is doing well. It's absolutely freezing cold here in the UK. There's snow randomly. So I'm up a bit earlier today to be fair. So I've actually if you check out the streaming schedule, then I have changed my stream times for the next few sessions or so, just because the time that I had it on had meetings and stuff. So I'm going to be coming on just a couple of hours earlier. I do apologise if that's thrown anyone off, but if you are in the room and stuff, and also on YouTube, you can see and watch you can re-watch the streams. So if you can watch it sort of at your own time and your own pace, there's no problem at all. Hello to you all in the trading room who are awake on this earlier time slot. Dibble, hello to you. Good to see you. It's lovely where you are. Oh, amazing. What sort of temperature are we saying where you are? R2GB, hello to you as well. It's very good to see you. If you are around as well on the YouTube channel, feel free to pop up and say hello. You will notice that the title of the stream today is a live trading Q&A. I am aware that there may be some people normally who are on the streams who are missing, and that's fine. But if you are around and you have any questions, trading related questions, then I just strongly recommend that you ask those questions today whilst I'm here, of course, and I'll answer those questions for you. They can be market related, they can be trading related, they can be psychology related, anything that you want to discuss today. Put it in the chat room. The reason that I've put it there is because it's been a bit of a slower week, I think. I don't know if people have found that as well. It's been a bit of a tougher week to try and get real market moves. But we'll dive into some of the biggest movers at the moment as well. And whilst I'm doing that, if there are any questions, and then you can let me know. If not, then we could have a shorter stream. It doesn't really matter. Shorts and t-shirt weather. Wow, lucky you. Okay. So of course the main sort of like talking point of this week isn't really one that I like to go through, but it's unfortunately one which is having an impact on the markets. Is obviously the escalation, should we say, in the war between Ukraine and Russia, and now seems to be going into what's being described as more of a hybrid war between NATO and Russia. Obviously, we had the news over the weekend that the US would be supplying missiles to Ukraine, which they can use directly in combat against Russia. They did use those US missiles, and that caused a lot of angst and concern about the threat of now escalation. And Russia said that it would retaliate. The thing that's really concerning to everyone really is the threat of nuclear escalation and a nuclear retaliation from Russia as a result of the US and potentially the UK as well providing these missiles to Ukraine that would then be used directly in combat against Russia. That's the concern. I woke up this morning and there hasn't been anything new than what it was yesterday. The US closes Kiev embassy after a warning of a significant air attack, and that was the main thing that we've come to light today. And I just wanted to quickly touch on some European stocks as well, because people will probably be wondering why we've seen such a fantastic rally in US stocks, for example, but European stocks have been a little bit muted. Well, that's down to all of this as well. And you can see with what's been going on, the markets aren't really sure about direction at the moment. You can see that it's been a bit of a mess on the German stock index really since the beginning of November. It hasn't really shown any clear signs of direction. If I just drop down the time frames a little bit as well, you can see we are still really in bullish flow. We've had a nice liquidity sweep on this low as well, which I'll talk about in just a second, because one of the questions that came through was about utilising liquidity sweeps. So I'll make sure I take a look at that as well. Danis, hello to you. I know it is. I know it is a bit early today, but I've got meetings and stuff at the normal time that I stream. So I thought I'd come on a little bit earlier rather than a little bit later. Hopefully that's okay. Okay, the other thing I wanted to speak about today, and it is a bit of a quieter day, so I do apologise about that. But we do have a consumer price index print that's been released about an hour ago out of the UK, and the inflation data was stronger than what was forecasted. The consumer price index year on year rose 0.6% from this time last year. Previously at 1.7, forecast was for 2.2, so there was a lot of inflationary pressure priced into the market. We actually even beat that expectation. The core ticked higher as well by 0.1%, and the month-on-month figure as well ticked higher. So quite a strong inflation print out of the UK. And when you go on to the sterling pairs, you can see as a result we have a bout of pound strength coming into the market. So maybe that's something we can try and get into today, because you can see that the pound has taken a bit of a beating really across most of its across most of the pairs. I'm just trying to see if there's anything clear cut on any of these. Okay, right, there might be something here on euro sterling. If I go onto the daily chart, I say, right, okay, here's our look at that. Wow. Beautiful reaction from the 61.8%. We now see it potentially moving lower, and I think that we could be in for a move. I'm going to mark that as a potential target, or key level, should we say. Oh. Where can we get in? That's the question. Looking now for sort of like a supply zone or imbalance area. It's not quite, can't quite see one yet. I think this is going to this is a trade which hasn't really taken shape just yet. We are potentially moving in toward a demand zone. Maybe we'll look for something like that. Okay, nice. Difficult one. Difficult one because we've sort of already missed the boat here a little bit. But that's fine. Okay, I'll keep an eye on that one. Maybe there's a chance for... What I'm basically waiting for is a clear supply zone or a clear imbalance area after we've seen that initial reaction. You can actually see as well how we took the liquidity on these highs, and that just would have been a really nice potential selling opportunity. Okay, but there is some pound strength around today, so just bear that one in mind for the next sort of 24 hours or so. Okay, I haven't had any questions through. So what I want to talk about was a question I've had before I come on the stream and asking me to cover it on the stream, which is absolutely fine. And that's basically having a look at some liquidity areas and why liquidity areas are important. Now, for those of you who have no experience in liquidity, but you've heard about it, you've heard it being spoken about, I've actually got a educational course on liquidity here. It's on course number 6, Growing a Successful Trader. If you go down to module number 3, on this lesson here, 1, 2, 3, 4, we have a lesson here on liquidity. And I recommend that you watch this video to understand what liquidity is all about. And basically what the concept of liquidity is about. It's about stop loss hunting. So it's about areas in the market where you would typically have a lot of retail stop losses. What happens is the price tends to be gravitated towards that area. The liquidity is then taken and the price reverses in the other direction. And basically it stops out a lot of retail traders. And the theory is that it provides the liquidity for the big banks to take the other side of the market. Is it true? Is that bit true? I don't know. So what you have to think of is, you have to look at a chart and you have to say to yourself, right, okay, and you have to think like a retail trader. If I was going to be selling the market, in this situation, right? Let's say, for example, you're looking for a short on the euro versus the pound because you can see that the structure is bearish because we've had a big move down from here down to here. We're now retracing and you're like going, yes, come on, I want a selling opportunity. What a lot of retail traders do is they'll see an initial candle and they'll think, oh no, I need to sell now, I need to sell now. And when you go down onto the 1 hour time frame, they'll think, oh, here we go. The market's created a high there and then it's created a lower high. And therefore, I need to sell the market. Let's say they sold it here. And I'll put my stop loss on this high. And I'll target down here. It looks great, right? But then if you play the market through, initially trade moves well. And then you can see you get stopped out. And then what happens? The real distributive move happens. And then we start to see the market. And it sort of leaves you behind. Now, the best way to spot liquidity grabs is to look at key highs. Right? And what you're looking for is for the price to, or key highs or key lows, you're looking for the price to go toward that level, threaten to break above it or break below it, but actually what you get is a wick that's created, and then you want the body of the candle to close back inside the range. Does that make sense? So in this example, here's our high. Market moves lower, then starts to trade higher. At one point, we would have seen a lot of that at one point the green candle, the body of this candle, the green bit, would have been all the way up here, and people would be thinking, "Oh my God, this is euro pound's going higher." But what happens is the sellers step in, and the candle then closes here, which is below this low, and then we get that wick that's created. And then what you're left with is these wicks that have essentially grabbed the buy side liquidity and given the fuel needed to move the market in the other direction. Example number 2 is the sell side liquidity example. When the market goes to grab the buying stop losses, yeah, and then move in the other direction. Look at this, looking at an example, because I saw it earlier on. If you look at what happened here on the German stock index, right? Sell side liquidity. I know you've already seen what happened, so I won't go back too far. But there's our key low, right? For everyone that's buying the market here in this position, where are they going to have their stop loss? Well, they're going to have it below this low, right? That makes a lot of sense to put your stop loss below there, because you think if the price goes below that low, then we're going to go a lot lower. What happens? Huge candle. Look at that. See that at one stage? That looked bearish, right? And then suddenly, everyone starts piling to sells here, and all the buying stop losses are taken. Wick created. Candle closes back inside the range. And then boom. Market now starts to trade higher. Spotting these liquidity areas are really easy if you follow a few simple steps. The first step you need to follow is mark a key high or a key low. Okay? Once you mark the key high and a key low, wait for price to test it. Look for a wick below or above or below the level. The candle, the body of the candle, sorry. must close back inside the range or back inside the structure. And there's your liquidity grab. And then what people then do is once you get the liquidity grab, like this, for example, here, you can, if you want to use it as a standalone, technique, you can then buy the market at the open of the next candle with a stop loss below at the low of the liquidity. Because now we've grabbed that liquidity, this shouldn't be a liquidity target. That's the theory behind it. And I hope that makes a lot of sense for people. Good morning to you, Bobby. Hope you're doing well. And thank you very much for the message today. So I'm going to post this in the room because I actually think that now we've had a bit of a quieter, so far we've had a bit of a quieter day on the war front. I think this could be a good time to buy some European stocks, which is exactly what I'll do. So now we've had this buy sell side liquidity taken. What we're now looking for is a pullback. Nice bit of imbalance in there. So this is H1 imbalance. And let's look for something like that. Okay. And there you go. Nice trade idea spotted from liquidity. And it is a bit of a quieter session today. I'm just going to be writing an article today, so I'll post some market analysis and some trade ideas in the room. I've got quite a lot of my powders dry now. In other words, I haven't really got anything else on. If I do spot anything that sticks out, then I will be sure to let all of you know, of course. And of course, I will be active in the room throughout the rest of today if you are in need of me. And I do hope everyone has a good trading day. Trade safe and be careful in these times. We're getting towards the Christmas period. It slows down a little bit. So yeah, just be careful not to give too much back to the markets in these next few weeks. Okay. Take care, trade well, and I'll see you soon.